Hi everyone, Josh Gilbert here and welcome to Stock Break, where I give an in-depth analysis on public companies in under 5 minutes, breaking down their fundamentals and potential valuation. So let's dive in. Hello everyone and welcome back to another episode of Stock Break with me, Josh Gilbert. Today we're going to be looking at Block. You may have known it as Square previously, and from smartphone card readers to owning Afterpay and now Cash App, Block has come a long way. They've just joined the S&P 500, but its share price is still down around 70% from its 2021 peak. But profits are improving and its innovation is growing. So I'm going to see whether it's time to join the Block party. So a quick reminder before we break it down that this presentation is for educational purposes only. It should not be taken as investment advice or a recommendation to buy or sell any financial instruments. And if you're not already, don't forget to hit subscribe to get all of our latest episodes. So as I say, let's get into it. Let's break it down. Block, I mentioned a moment ago, formerly known as Square. It was co-founded by Twitter's Jack Dorsey back in 2009. And it started by helping small merchants accept card payments. So that could be through a smartphone or through those little white card readers that you see in your local coffee shop. You've probably tapped on one of those little white square readers at a coffee shop over the years. But they operate now in three main businesses. So it's got Square, which is its merchant platform for payments and tools. Cash App, a peer-to-peer payment and personal finance app. And then Afterpay, massive here in Australia, a buy now, pay later service that is also growing in the US and across Europe as well. Cash App is probably its main product. It's grown rapidly with about 57 million monthly users. It's huge amongst Gen Z, and Square is a key platform for millions of small businesses globally. So if we fast forward to today, Block has grown far beyond that original card reader. And the rebrand from Square to Block was in 2021. And this was a bit of a nod to one, blockchain technology, because CEO Jack Dorsey has a passion for crypto, but also its multifaceted business. It reaches as far as music. It actually has a majority ownership of streaming service Tidal. And as I say, in July of 2025, Block was added to the S&P 500, which was a big milestone that puts it on the radar of more institutional investors, and of course added across those ETFs, so it will be bought by all of those ETF providers across the world. Block operates in some pretty crowded areas of the market. So we think digital wallets, buy now, pay later, payments, and crypto. So we've got Cash App that competes with things like Venmo, Apple Cash. Then on the merchant side, Square goes up against Stripe, Aiden, PayPal, those types of businesses. Square's advantage has been its simplicity and integration. From payment hardware to software to analytics, it's been a one-stop shop. So a small business can start with, plug-in card reader, and then it can easily adopt Square's add-ons. So payroll, inventory, its online stores as they continue to grow. This ecosystem has helped build loyalty, and once businesses has its payments, receipts, etc., all running through Square, switching is probably going to be a bit of a pain. So that gives Block an edge, but it's also built a unique two-sided ecosystem. It has millions of consumers and merchants under one roof, and that means that we're seeing increasingly cross-product integration. So you've got Afterpay through both Square and Cash App. Essentially, it's building for the future. Big tech, though, it isn't standing still. We've got Apple with their Apple Pay, that tap-to-pay feature that's growing. That sort of bypasses that hardware like Square's reader entirely. And we're also seeing buy now, pay later getting a bit more crowded and more regulated as well. A look at the numbers. Block delivered a gross profit of 8.89 billion in 2024. That was up 18% year over year. Cash App now drives more profit than Square, and it grew slightly faster as well at 21% in 2024. Most recent numbers, Q1 2025, Block posted its most profitable quarter ever. Gross profit hit 2.29 billion, but the company did offer a bit of a cautious guidance. They trimmed full-year gross profit growth expectations to about 12%. This was citing macro pressures and a bit of pressure coming through on the consumer. Shares actually tumbled following the result, but were up not too long after on that addition into the S&P 500. On the positive side, adjusted EBITDA rose 15% year on year, margins improved, and the company is also aiming to hit the rule of 40. That's gross profit growth plus operating margin totaling 40%. within the next year. Free cash flow also turned positive in recent years, and Block isn't burdened by debt either. It holds several billion in cash and investments, which is really great news for fueling expansion or acquisitions. Shares are still down 12% year to date, so we're looking to those Q2 results that are coming up within the next month or so to push shares out of the red. Looking at the valuation, Block trades at about 28 times forward earnings. It's actually cheaper than the broader NASDAQ 100. It's profitable, growing steadily, and has a solid balance sheet. But the stock is still down about 70% from its 2021 peak. Why? Well, growth has slowed from those really big growth numbers that we were seeing back in its early days. Competition is stepping up. We've got a bit of worry over consumer spending, and we're also seeing some regulatory risks coming around, buy now, pay later, data privacy, these types of things as well. But given that sell-off and we're still off the highs, Guru Focus sees the stock as fairly valued with a growth ranking of 10 out of 10, which is pretty solid. Analysts are mixed, 35 buy ratings, 10 holds and 4 sells. So pretty positive, I would say, all round from a valuation perspective, especially if you believe in the future of fintech. Look, its entry into the S&P 500 is a big step, a signal that the business is maturing and being recognized on the global stage. So for long-term investors who believe in digital payments, fintech innovation, and the strength of Block's ecosystem, it could still be a compelling opportunity, especially still with shares well off their highs. So lots of opportunity, some risks in there as well. You'll have to let me know what you think of Block. Thanks for tuning in to this latest episode of Stock Break. To stay updated with all things investing, follow us on all podcast platforms. Just search for Digest and Invest.